Hi guys, it's Ian from OSBFX. It is Friday the 3rd of December 2021. It's 10:30 in the morning in the UK. Now it's the first Friday of the month. That means one thing for currency traders or traders in general. We've got the jobless figures coming out of the US non-farm payroll, often moves markets. In this video, I want to talk about the Japanese yen. I've got a confluence area to the upside, but I first want to go through a failed trade, which was New Zealand dollar against the Swiss franc, which we've been talking about earlier in the week. Although we did get a move to the upside, a brief move, I think about 40-50 ticks, it has reversed and actually come down and taken out what was my stop. So let's have a look at New Zealand Swiss first. So this was the pattern that I was playing, which is a perfected butterfly formation just here, and you can see we had this move to the upside, but we've reversed that quite aggressively, and the swing low has been taken out, and that has also broken this pattern because we're always going on about target levels as well as entry levels and stops. So if we had the target level here, then obviously, sorry, the entry level here, then the target level was up here. But we can see that this low's been taken now, so that completely invalidates this pattern, which is big news for me. And I've been looking at this morning and saying, well, how come that trade's gone wrong? Quite a few of them go right. Why has this one gone wrong? And I've gone back to my single currency charts. Okay, and I've made notes. I'm going to go to the 1 hour chart first. This is New Zealand. This is just the single currency on New Zealand. And the dotted red lines are my support levels using cipher patterns. Okay, the dotted purple, blue, and black lines are my support and resistance levels using my bespoke system. And basically what's happened here is this was a rally up that we saw from the confluence area, the dotted red line, but all we've done is hit this blue line, the resistance level, and the bias in New Zealand has actually turned to the downside. Now, as long as it holds on to this, then there is a scope for a move higher, as long as it holds on to this swing low, but it's looking pretty doubtful at the moment as we continue to drive lower. So basically what I should have been looking at doing is selling New Zealand near my bespoke resistance level, not really buying it here. And all that's happened is I've ridden this expecting it to keep on going, and all it's done is reverse lower at my bespoke resistance level. And if I go to the Swiss franc, okay, 78.6% was what we were looking at. There's no sink levels there. There's no bespoke resistance. This is a sink level a bit further up, which is around about 369, and that's off this chart here. So potentially moving lower. But again, this move up looks quite aggressive. And if we look to shorter time frames, and this is just a 4 hour chart, what's happened here? Well, we've used this as support, then this is support, then this is support, and then this is support. So basically, the bespoke support and resistance actually said that I should be buying Swiss here. I shouldn't really be trying to sell it there. That was a 261.8% extension, and it was also a 78.6%. So we had our sink levels there, but we want the sink levels to line up with the bespoke support and resistance. So basically, I haven't had a full signal, and in fact, I'm actually trying to break the trend, not go with the trend, which is pretty unwise. I'm just getting that back to that original level. So that brings me on to the Japanese yen today. Now, obviously, it's non-farm payroll. We can expect some volatility, should we say, over the figures. And we talked about this in the group this morning, and I said, well, yen's starting to move lower, and there's various confluence areas in yen around current levels, but I haven't got bespoke resistance until up here. So you can see the dotted black line and the dotted blue line, and this is a 161.8% extension, and you've got basically a broad barrier to the upside. Where are you, square? Just want to highlight it. There you go. So you've got this broad barrier of resistance here. Let's have it in red, since it's resistance, not support. So this is the zone that makes a bat formation and also highlights resistance levels. So that's basically saying to me, at the moment, I shouldn't be doing anything. I should be selling into yen up here because I've got my bespoke resistance levels, and I also make a bit of a disjointed pattern. But then that brings me back to yen crosses, and this is where we need some correlation. This New Zealand Swiss pushing through even lower now. So it's actually looking like quite a good cut. And again, the black lines are bespoke support and resistance levels. The red lines are confluence areas. So basically what's happened here in dollar yen is we've gone down, missed the trigger. 112.49 is the support level, and we've moved higher. And now we can see again, this is the 1 hour chart. We're driving this lower again on the back of yen going higher, not on the back of dollar, the US dollar going lower, because the dollar's actually going higher as well. So this is getting driven lower. So do I want to be buying dips in dollar yen? Well, no, I don't, because if I look to the single currency charts again, I haven't really got anything on the dollar. And in fact, the dollar could quite easily move higher as far as bespoke support and resistance levels are concerned. I haven't really got anything in the euro, but what I do have is sterling yen. So the dotted black lines, remember, are bespoke support and resistance levels. And if we go to this chart here, this is the first chart, this is the daily chart. We've got a 161.8% extension just below. Okay, we can't really make a pattern there, but if you're an Elliott wave enthusiast, what you would believe to happen at around about 161.8%, remember that just corrective moves, is something like that. So we've got a reason why we might see a correction to the upside. Well, we've got two reasons now. We've got bespoke support, we've got a band of them, and we've also got a 161.8% extension. Now, this to me as well is looking like I could potentially see, and that's what we're looking at, the potential outcome. I could potentially see a head and shoulders pattern. So that's sort of saying, well, this rally up, if I get to these levels, and the exact levels are 148.93 and 148.83, so see if they hold today or next couple of days, then I could see a head and shoulders pattern, because this is looking quite good as a general support level, because we've touched it on numerous different occasions. And then I go to this chart, which is the 4 hour chart, and suddenly it's looking a bit more rosy. So I've got the potential of a 261.8% extension from this 4 hour chart, which would basically highlight that this is just another leg to the downside before a correction higher. And if I start putting some indicators on, and I'm not really that bothered about indicators, but this is looking like a falling wedge. And what should you see when you see a falling wedge? RSI. You should see rising RSI. So basically you've got the chart making lower lows, you've got the RSI making higher lows, which is bullish divergence, and it should always be seen when you see a falling wedge formation. So that's sort of highlighting buying into a dip, because I've got numerous different reasons. Now, what about sterling? Can I be buying sterling? Well, if I go to this chart, and I've got different formations here. Okay, I've got this pattern. So we just move lower. So there's an inside pattern, okay, which suggests a move to the downside. So we've got this inside pattern, a Gartley, which will potentially make a butterfly. So as long as I'm down around here when sterling yen, if sterling yen hits that support levels, then I can play the CD leg higher. Okay, I want to be as close to this previous swing low as possible. So there's the potential for sterling to move higher, not from current levels. I want them down here. Okay, to then go up to form my pattern, to then go down again. Now, if I go back to the yen crosses, and I've also highlighted New Zealand yen, okay, because this is the support level, bespoke support at 76.42. Excuse me. It's very close to the 78.6% pullback level, which then forms a butterfly formation after the BC leg. So basically, what I need here, and again going back to the single currencies, I need New Zealand really to hold on to this swing low while yen moves to the upside, because if this pattern breaks, then I have got a reason, because I can play it off this chart, but I need to have a reason why I can see New Zealand going higher. So just to reiterate, the main focus is on the Japanese yen, and the reason the main focus is on the Japanese yen is because we have the potential for this pattern at bespoke resistance levels, and then the reason that we concentrate on, or I'm concentrating on, sterling yen and New Zealand yen is because we've got the dotted black lines again, the bespoke support and resistance levels. What I didn't have in New Zealand Swiss was I didn't have bespoke support or resistance, and in fact New Zealand Swiss resistance levels are actually higher up, sorry, and there's no support for quite some time. So just to reiterate what I'm looking at today, I'm looking at, or potentially over the next couple of days, is a move to the upside in the Japanese yen, but only to sell into that upside rally. And for that, I would look to two yen crosses, which is New Zealand yen and sterling yen, dependent on where the single currency baskets are at that point. Okay, guys, I hope that makes sense. Good luck today. Non-farm payroll can be extremely volatile. If you're in it, just trade safe. Okay, many thanks. Take care. Bye.